Good evening, everyone. Today is 27th of October 2025 on a Monday morning. So I hope everyone has a good Monday instead of a blue Monday. Yeah, I forget about the time. It's actually 8:30. Initially, I want to have it at 11 a.m. today because I am flying off tomorrow quite early in the morning. But unfortunately, I have other work engagement. Okay, so I have to still do it at 8:30 p.m. tonight. Okay. So tonight, we are going to talk about the month November 2025 forecast is month of enthusiasm. So we shall see what is the meaning of enthusiasm, the month. So for those who are new or have called in for the first time to our platform, can you type an N in the chat box so I know if you are a new um, person or this is the first time that you call in? Anyone? Any new members or any new followers that follow astrology and global trends? Seems that not um no answer. Too shy to tell me because I saw a few new names. Yeah, okay. So yeah, this platform is where both PC and I are applying our knowledge in different fields to forecast about the global trends. I use Chinese astrology, and then PC will use his trend research, okay, to forecast on the economic, financial, geopolitical events, um, which is make up of the global trends that will impact the investment market as well to help you to make a better investment decision. Okay, this is already our 41 episode, right, PC?
Yep.
Yeah, we have started this, I think, 3 years ago, since year 2022. Okay, so we will start as usual. We will start the talk agenda with the introduction of us, um, a little bit of disclaimer, and then a brief recap of last month's forecast, where we will check, on last month how accurate we are in our forecast. Okay, and also next is that, of course, we will go through the most exciting part or the highlight of the talk, which is the influence of the five element energy in November 2025, where I will do a forecast based on astrology. And PC will also go into the geopolitical financial forecast using his trend research to see whether it correlates to what I'm seeing from the elemental standpoint as well. And we will close off by summary and also Q&A. Okay. Yeah. Before we start, let's have a disclaimer first. The content of this talk is purely based on our study in the global trends in relationship with the five elements in Chinese astrology and global trends research for use to use as a guideline in your investment decision. I would like to caution that everyone here, inclusive of the public and also our very own member, that especially we will need to be very cautious in making investment decision in such volatile situation, and you do your own research diligently. And for our members, we always have a Telegram group where we can discuss, and also the members can reach out to us as well if they need any information, okay, any extra information which we can provide. So we will not give any stock advice, okay. For members, it will be, as I said, it will be additional support through email, and then you can also address it in the Telegram group. So we actually, since this is a global trends, we will analyze different regional economies, the main one, such as US, Europe, and China. And definitely in
Evelyn,
different, yeah.
your voice is a bit soft here.
Oh, okay. Yeah. So
Yeah,
definitely
better.
there will be inherent differences. Okay. There will be inherent differences between the regions as the observation are based on our studies and the current economic trends, it will not reflect any absolute or definitive judgment or opinions about any specific regions. We will just present it as it is, okay, of what we have seen. And yeah, so this is both me and BC that we have talked about it. And I think till today we have achieved quite high accuracy in our forecast, about 80%. And most of our members also has done quite well in their investment, which we are very proud to say that also. Okay. Yeah. So um we have already published actually 5 books in total in for this platform. The one on unlock your wealth potential, which is available the online um shopping channel. Yeah, about the 5 years, actually the first 5 years of period 9 for those who are in astrology, definitely you know what is period 9, okay? And most of the things that we have predicted has also materialized. Even now we are only in the second year of period 9, okay? And this is our annual forecast book. We started with the water rabbit year forecast and then followed by wood dragon, wood snake for this year, where I think most of the members, also all the members should have this book and they can, they, they have gone through, and I think most of the things that we predicted has also come true. And now we are in the midst of preparing for the 2026 Fire Horse year astrology and global trends forecast as well. Okay, so just to recap what we talked about in month of October. So in the month of October, because this is a Yi year means that the Yi is always the leader. The year pillar is always the leader, the Tai Sui. Because this year, the Duke of Jupiter for the branch is snake. So the branch and the stem should be Yik. Okay, so normally when you are in the Duke of Jupiter, you are the leader. And last month, because the Yik there's no water in the chart, so it's no support. So it's actually a very hard time for leader. We can see that there's a lot of problems and also a lot of scandals related to some of the company leaders also. Okay, even Nestle, I think one of the top guy also has a problem related to um the women subordinate as well. Okay, yeah. So the chart, the Earth is actually very strong. The dog and the dragon appearing means that they are both like a clashing animal. So there's a lot of changes also. Yeah. And all this clashing brings about physically, it brings about disasters as earthquakes, landslides, and then slow and heavy energy, and also um, market might feel like flat or bearish, but there's a burst of volatility which it does not have a long lasting upward trend. Then the weather possibly is cooler, and also there are some diplomacy shows, and um, the global decision making feels stuck last month, and also there's a stagnation energy. So this is the market that we have predicted that um, the financial market is a bit sluggish. Like Hang Seng also fall 2.5%, and some of the major stocks also ends lower. Then there is also economic slowdown and supply chain issue again in some parts of the industries. Okay, yeah, and some people are not very happy also with US itself, and also yeah, these are all the headlines related to agriculture that is under pressure, where in US farmer finds that is beginning because of the weather itself is beginning to get harder to grow. Okay, crops to predict the weather pattern. Okay, they should have used the book of Chinese almanac. Then you can predict quite accurately about the weather. So weather volatility, of course, natural disaster. We have noted some. I think this one is in Philippines. Yeah, unfortunately, I think we have some Philippines followers that call in, and also landslides in India. Unfortunately, that this happened. Yeah. So yeah, and also some of the leader changes as well. Okay, and then some of the headline diplomacy still back and also conflicts. Okay, so yeah, this is the headlines that is correlate to what we have predicted. Okay, with high accuracy. And in the month of November 2025, energy, let's look at the month of November. Month November again, there is also another clash between the um, branch because snake and peak, the month of November is already considered as a peak month, a high month. Okay, we are in the beginning of winter month already. Okay, it's a Li Dong. That means the start of the winter. Okay, and with the snake in the year pillar, there is also a clash. It combine at the stem level. If you look at the Li Dong 八字 or the Li Dong four pillars, you can see yin and geng combined, ding and ren combined. Okay, there is a there is a there's a ren, I think, um in the hour steps, and there is a geng actually in the um day stamps. That's why they sort of combine. Okay. So everything when combined, everything looks like quite good on the surface. But internally, there is a clash because of this clashing animal. So and then water and fire also shows unstable atmospheric conditions and rising of international tensions as we can see, especially in maritime regions because high represent a sea water, and then there's a friction of um, global resources energy control is likely to happen. Okay, especially global resources are the war about the global resources, especially on rare earth, has not stopped yet. In fact, this is just the beginning. And also flash floods could happen due to heavy rainfall and electrical fire. So the economic trends that the matter will be active but cautious in growth. So water will be sort of delay and will be quite challenging, especially in global shipping, and infrastructure may face pressure and from environmental events and supply disruption. So yeah, and the market might also respond because these two are sky horse animal. So the markets might respond quickly to global geopolitical news and it's volatile also. Okay, so this is the what the four pillar for the month of November is trying to tell us. Okay, and the next one is on the hexagram. Yeah, we look at the hexagram itself. In the month of November, is actually hexagram number 16. Is enthusiasm. Enthusiasm is actually um quite unique in terms of you can see the Chen Hua. That means the Chen. This is Earth. This hexagram consists of two trigram. One is the earth kun gua, another is the chen gua together. So actually the chen that means there is movement hitting the earth. So potentially um there is also could be landslide or earth movement or systemic activities, unfortunately. Okay, so and actually hexagram number 16 is a very happy hexagram. It's a celebration of success, but unfortunately when celebration of success happens, people will tend to be complacent. This is the downside of it. So the government and the institutions might push for strong narratives to boost public morale because we know that demonstrations are happening all over the place. And people are not happy with the inflation. In fact, the inflation is not going to stop. Okay, and then there will be even mass um, mobilization. Okay, actually, enthusiasm is a very dangerous hexagram. On the surface, that is celebrate the success, but unfortunately, inside, this is actually like kangwa. Kangwa means that the water um the water core in the North Palace is this type of water core, normally they hide a lot of things, because water inside they hide a lot of dangers. So there are danger inside. This is why I always ask, especially if you are investing, also do not be complacent. Okay, yeah. And- Okay. So I think this is for the month of November's forecast. So over to you, PC. You can maybe you want to share your slides.
Yeah, you need to put me as a co-host
Yeah,
first.
okay. I have not put you as a co-host yet. Okay. Yeah. Okay. Go ahead. PC.
Okay.
Let me just stop sharing.
So, uh, to recap, um, what actually happened in October. So we make several uh, projections about what will happen in October, but due to the government shutdown, a number of economic indicators were not available. So we mentioned that there could be some news on the issuance of stable coins and such, but again, probably due to the government shutdown, Congress is not in a is not available to make decisions or to pass bills and such. Um, there were no further news about that. And in China, we expected the Hang Seng Index, tech, the Hang Seng Tech Index, to continue to attract investment and pushing the index higher in the month of October. But after it went up for the first week of October, there was uh, strong selling, and to date, it has fallen about 5.2% this month due to profit taking and news of additional tariff being imposed on China by the US. So before the clarification or the so-called consensus on a new on the trade deal, the HSI tech index was down as much as 11%. But because of the news over the weekend, it had a rally on Monday. So therefore, that loss was narrowed. But where we got right, so as predicted, US government debt and budget deficit continue to widen. So the budget surplus reported for the month of September is inaccurate. For the members, I've written in the weekly report and shown why it is wrong. There is actually no surpluses. But we'll dwell on that again later, and I will explain it in more detail. So US government debt as of 21 October is 37.9 trillion, but I believe that over the 1 week since it has exceeded 38 trillion. Okay. So gold and silver continue to rise in October. As of 21st October, gold has risen 8.7% and silver has risen 5.4%. But over the past few days, there has been a lot of selling, yeah, due to a number of reasons. One in particular is that the LBMA is short of physical silver. So you see that there's a lot of heavy selling in silver. At one time, silver was actually above $50 per ounce, but recently has fallen back down to about 47. So part of the selling was because LBMA does not have any silver, and gold is being there's heavy demand for gold among central banks. So what and there's not enough gold, okay, to meet that kind of demand as well. So what the LBMA does is that it shorts the gold and silver market massively, so that it forced people to really weigh whether there's further upside for gold and silver. And for those who have who has a negative influence, may decide, okay, to sell their gold and silver so that the physical the LBMA would have the physical, okay, to deliver. So this kind of massive selling actually creates a cascading effect, negative effect. And for those who have very weak hands, or for those who panic very easily, then they will sell their physical. So this is how the gold and silver market is being manipulated, and it has been done so for the last 4 decades plus. And after bombing of several vessels in the Caribbean, the US has included Colombia as another narco-terrorist state other than Venezuela. So this came after the Colombian president criticized Trump. Okay, and in our earlier projection, our earlier forecast, we mentioned that the US may expand its zone of conflict in Latin America. So we mentioned that the National Guard will be deployed to more cities, and on 21st of October, the appeals court allowed Trump to deploy the National Guard to Portland. So obviously, I think in the US, there's a lot of turmoil because first there is the racial profiling by the ICE, to arrest foreigners and deport them. So there's a lot of complaints of racial profiling, and there has been a lot of fight between Democrats and Republicans on the deployment of National Guard to the uh, Democratic Party held cities. So as we mentioned, more protests against ICA throughout October, and mass turnout for the No Kings protest in the US. So in Europe, where we got right is that we mentioned Europe's manufacturing will face challenges, and Euro in area industrial production came in at 1.1% in August, down from 2% in July, while UK industrial production came in at negative 0.7% in August, down from negative 0.1% in July. Germany PMI manufacturing came in at 43. France PMI manufacturing in October came in at 49.2. And UK, yeah, sort of missed this one, but the data will be available in subsequent page. So in Europe, we forecast many companies in Europe will face tremendous pressure due to the weakening economy and the rapid deindustrialization. Here we have publication from DF News that says that German insolvencies up 10.4% in September, and insolvencies in UK, France payment survey, 86 companies face late payments, and according to the latest Real European Distress Index, reveals that retail and consumer goods remain Europe's most distressed sector, with conditions now surpassing levels last seen during the 2009 financial crisis. So a lot of companies are actually right now having a lot of problems in Europe. So we also warn about political turmoil in Europe. Here, the German coalition unruliness threatens Merz reform agenda. France's democratic crisis is showing increasingly alarm symptoms, and British PM Starmer under pressure as voter support rises for reform UK. So we also got right in our forecast that Europe unemployment will worsen, and compared to July 2025, August unemployment increased by 39,000 in EU, and compared to August 2024, August unemployment increased by 85%. 85,000 in the UK. So yeah, sorry, this is EU. So UK unemployment rate came in at 4.8% in August, up 0.1% month on month and up 0.7% year on year. So this one is year on year comparison. This one is month on month comparison. Yeah. So US dollar strengthened against GBP, Great British Pound, as we predicted, and it also strengthened against the euro, uh, where the US dollar is concerned. So in China, we forecast that China GDP will come in below 5% in Q3, and we were right. It came in at 4.8%. Inflation remains muted as expected, coming in at negative 0.3% year on year in September and negative 0.1% month on month. China real estate market remains weak as expected. Cities continue to see declines in home prices. And we mentioned that the China would start to expand the internationalization of the renminbi and looking uh, more aggressively towards international trade and finance that is gold back. Okay, and here it shows that the gold warrants held by the Shanghai Gold Exchange have reached 86.6 thousand tons. But more about this later on how that gold warrants are being used. So we mentioned that a lot of influencers and are in China is already telling the people to buy silver because gold has become more expensive. So here you can see that it is putting pressure on the availability of physical silver in the Shanghai Gold Exchange. So investment in silver ETFs has been suspended. Priority is now given for industrial needs, while futures contracts are cash settled. Physical silver in watts at the Shanghai Gold Exchange reached a new low as of 23rd October. Physical silver is being retailed at $61.23 to US $128.68 at JD.com. This is on a per ounce basis. So US economic indicators, CPI rose 0.3% month on month in September. Year on year, it rose 3%, up from 2.9% in August. So there is a slight increase, but as you all recall, when the report came out on Friday, there was a huge rally because it came in within expectation. So right now, people are discounting that there's any inflation at all, okay? They don't care, as you know, as long as it is below expectation or comes in within expectation. So that is why even though inflation actually rise in September versus August, but the market still rally because it fall within the expectation. So core CPI rose 0.2% month on month in September. Year on year, it rose 3%, down from 3.1%. So as you can see, again, below expectation and below last month and the market rally. So the National Association of Home Builder Index came in at 37 in October, up from 32 in September. But anything below 50 is still in contraction. Existing home sales rose 1.5% month on month in September. Year on year, it rose 4.2%. Now, there is more homes are being put on sale, okay, and because of the lower mortgage, right now is this the national average is around 6.3 percent. Really, I think it's down almost 1% from several months ago. So that is why people are buying homes because of lower interest. So preliminary PMI for manufacturing came in at 52.2, while that for services came in at 55.2, both signaling expansions. So there were no other indicators due to government shutdown. I want to discuss why surplus that didn't happen. Okay. Now the US government posted a surplus of for the fiscal year ending September 2025. So an analyst, Luke Roman, actually saw the figures and put in a number of questions. So one of the first questions he asked was, how did we spend 37 billion on interest in the month? Okay, on 37 trillion in debt, which is way below annual run rate. So, okay, for the month of August, the total amount 93 billion. Okay, and on top is actually much higher in the month of September than in August. So Luke, other question was, how did we only spend 32 billion in the month on Medicare, which is way below the annual run rate? So in comparison, for the month of August, the US actually paid 141 billion in Medicare. So you can see that there's a wide divergence. And Liu asked another question. Why veterans benefits only 50% or 17 billion below monthly run rate of recent years? So in comparison, in the month of August, the US actually paid 50 billion in veterans benefits. So if for the month of it shows that the US has a surplus of 198 billion. Let's treat this as a savings. Okay, and you can see that if we minus those that in the month of August, total amount paid for those three sectors, less the amount that the US paid, so-called paid in the month of September, is actually 198 billion. So this is actually a coincidence, okay? But here's the proof. Here they say that total outlay is 346 billion. But if we were to calculate each and every one of this sector, the total sum on the right is 560 billion, not 346 billion. So the unreported spending was 214 billion because 560 minus 346. So there's no surplus because total receipts of 544 give us a budget deficit of 16 billion. So if we look at it, 544 minus 560 is actually already a budget deficit of 16 billion. But if we calculate the amount that is under-reported of 190 billion, the total budget deficit should be 214 billion. So that is how the US is manipulating the amount that is paid. Now, you can tell that it's being manipulated because net interest cannot be reduced because it's the amount that the US must pay. And the only way that is reduced to 34 billion is because it is being underreported. Okay, so US government debt is now more than 38 trillion. In 2 months, from August to September, the US government debt has increased by 1 trillion. Now, previously, it took about 3 months to achieve 1 trillion. But right now, in 2 months, it can achieve 1 trillion. So you can see that ever since the big beautiful bill, okay, which granted the US government 5 trillion increase, okay, to increase in the debt ceiling, which is supposed to run for a few years. In this, in the first 3 months itself, it's already more than 1 trillion, which means for the balancing of the next several years is only 3 trillion plus. How can they actually use this 3 trillion plus over the next few years? Because if 2 months, another 2 months, probably it will deduct another 1 trillion. And by early next year, I think we would have reached another debt ceiling, because that 5 trillion is supposed to be for, I think, until 2027, if I'm not wrong. So right now, it's like 7 or 8 months. It has 7 to 9 months, probably by early next year. The US could have already consumed that 5 trillion. And this is why there is a lot of, you see central banks, they are actually buying gold to shore up their assets, because everyone is finally, major central banks is finally realizing that the US government is on a debt spiral which it can never be able to get itself off. And that is similar to the Japanification, okay, of the Japanese economy, where the BOJ can never raise rate because that would put the government into insolvency. So the US is escalating its debt in the midst of increase in inflation, and the Fed is going to cut interest rate in an inflationary environment. So it is very much like Japan. So what could happen in November? US CPI will continue to be manipulated lower to fit the narrative that inflation is under control. I'll share a chart afterwards. Q3 GDP will be manipulated to project a growing economy, even though structurally the economy is under siege, because debt delinquencies are rising, which could put many regional banks at risk. Now, recently, there's a components parts company that declared bankruptcy, and another car dealership, second-hand car dealership that goes into bankruptcy. And right now, there is another one or two potential candidates that are actually involved in auto loans that could be could actually be in bankruptcy. So all this would actually put the risk on regional banks. And if the amount of delinquencies continue to rise, we may see another few more regional banks failing. So the Fed interest rate cuts in an inflationary environment will propel the risk of stagflation, because the US unemployment is already down after the revision, and in the month of August. So September report didn't come out because of government shutdown. And we all know that inflation is going to rise, and the economy is right now being driven by debt. Okay, it is not driven by organic growth of the sector, but it's more money putting in that goes into the stock market, and that becomes part of the economy. So US Treasury Department will continue to buy back US Treasuries to keep the yield down, especially when the Fed interest rate cut could force the yield of US Treasuries higher due to the threat of higher inflation. And recently, the US Treasury Department has been buying back US government bonds quite consistently. Every month, they will spend a few $billions in buying back US treasuries. Now, this is something that is very comical, because the US Treasury Department issued debt to buy back its own debt. Okay, so that is why that this can only happen when the debt is really out of control and everything is being done to bring the yields down, because Otherwise, the borrowing cost will continue to escalate. So inevitably, we are already seeing uh, a stealthy QE being done. Okay, although QE is supposed to be implemented by the Fed, but the US Treasuries right now is stepping into the Fed's shoes because they need to control the yield. And you can imagine that the Fed in its last FOMC stated that uh, they have to come to an end of QT. So why did the Fed mention that they need to end QT? Because it is a signaling that they may be forced to embark on QE. So moving forward, that's going to be massive QE, whether directly or indirectly. The Fed, of course, if they do QE, will be a direct implementation of it. And indirect would be when the US decides to permit US corporations to issue their own stable coins and use that issuance to create that dollars out of thin air to buy US Treasury, okay, in order to force the yield down so that the US can continue to expand its debt at a much lower pace of interest payment. So government shutdown. Now, this is very controversial because there are news that are saying that the government shutdown is being done deliberately. Okay, not because of the 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 Trump admin like to say that the Democrats are holding back the government, but a lot of people are arguing why they cannot resume the House and the Congress, the Senate, because they have control of all three branches, including the presidency. If they actually call back everyone, okay, they can actually overrule a lot of the overrule this government shutdown. So these are some political observers that are now challenging the narrative that it was the Democrats who are actually blackmailing the Republicans. But their reasoning is that because it's being used to implement Trump policies without Congress approval. Okay, this includes expanding the US involvement in a potential military conflict in Latin America. And, and because of that, there is a lot of vocal resistance against the US military adventurism in Latin America. So more political turmoil in the US due to ICE, racial profiling, and National Guard deployment in major cities. And because of this, more investment are headed towards gold and silver ETFs and mining companies, because suddenly everyone is trying to go for the safe haven. Okay. So because of the demand for people going into gold and silver, you can see the COMEX and the LBMA working hand in hand, trying to suppress the price, trying to deter people from moving into gold and silver, because that's not enough to spread around. The Shanghai Gold Exchange already shown that there is not enough silver to go around, and they are mainly a uh, physical exchange, which means that every futures must be backed by physical. So you can see that there's a war right now in the gold and silver market between the paper derivatives and the physical gold and silver. So during this period, there's definitely going to be a lot of volatility. So Europe economic indicators, Euro CPI came in at 2.2% year on year in September, up from 2.1% in August. UK CPI at 3.8%, unchanged from August. Euro area retail sales rose 1% year on year in August, down from 2.1% in July. UK retail sales rose 1.5% in September year on year, up from 0.7% in August. Now, German PMI manufacturing came in at 43, while services came in at 52.5. France manufacturing came in at 44.5 in October, and services PMI came in at 48.9. UK manufacturing PMI came in at 46.2, while September in October. Okay, so it's unchanged from September, and services PMI came in at 51.9 versus 54.2. So maybe just change this to 46.2. So Europe, what could happen in November? Germany industry is under threat again after China prevented chips from the country to be shipped to Nexperia after the Dutch government seized the company under the pretext of national security. Nexperia's main customers include auto manufacturers in Germany, Japan, and the US. Now, the Dutch tried to convince the market that they acted in good faith because the CEO was siphoning the money out from the uh, companies, out of the company based in the Netherlands to China, to another Chinese company, also owned by the owner. So they say that this is a threat of national security and therefore they seize the company. But the thing is, this company is privately owned. It's not public listed company. So if the owner wants to move his money to support his subsidiary in China, is there anything wrong? And when the government sees it, they come up with a lot of reasons that the CEO, is not acting in good faith, is for the detriment of the company, and come up with a lot of things like trade secrets and such. But it is a private limited company, which the owner actually bought when it was down because it's losing money. I think they have spent about several $billions to bring the company out of its deplorable condition before becoming a consistent taxpayer, okay, which means it's making good money. So the thing is, even if the CEO is committing fraud, let the court charge the person, whereas the company should then appoint another person and not being seized by the government. So because of this, China has decided that because at Nexperia products actually 80% are manufactured in China, so the Chinese counterpart say, well, we are not going to sell the chips to Nexperia. So that is why Germany right now would have another 1 week or two for the number of chips left before they run out of it and may be forced to suspend production. So of course, the EU vows retaliation, but it will be on deaf ears, and China will no longer entertain threats from the EU. So likelihood, we will have another trade war brewing between EU and China. And because of that, manufacturing in Europe will remain in the doldrums. France just got a rating downgraded by Fitch, so we can expect some turmoil in France involving government funding and the 5-year CDS credit default swap could rise in response. The UK will see similar stress in funding the government, and Germany may be forced to relook its welfare and pension scheme, but will see retaliation in the form of protests and demonstrations because Germany itself also face a funding issue. So there'll be more vocal outrage against the EU's immigration policy, with anti-establishment parties gaining support from the population. I think recently, even Italy's prime minister is against the EU's immigration policy. So the euro and Great British pound weakness against the US dollar will remain. So if we look at China's economic indicators, Q3 GDP grew 4.8% year on year. For the 9 months, it grew 5.2%. Now, looking at China's fourth quarter is definitely going to be very strong because October started off well with record number of domestic travel, um, about 5 billion people, okay? And there's a lot of consumption uh, through the local tourism industry. And of course, we have the Double 11, okay, which runs from October to November. Now, previously, it was just, you know, what they call Singles Day is just a single day, okay? But right now, it's spread over 6 weeks. So that's why there'll be a lot of retail business as well as consumption. And going towards year end, there'll be uh, a lot of festivities. Okay, so CPI fell 0.3% year on year in September, up from 0.4% in August. So there is some uptick in inflation. Core CPI rose 1% year on year in September, up from 0.9% in August. PPI came in at negative 2.3% in September, up from negative 2.9% in August. Retail sales climbed 3% year on year in September, down from 3.4% in August. Retail sales in the first 9 months grew 4.5% versus 4.7% in the first 8 months. So you can see that September closed rather miserably. Okay, and that is why for Q3, GDP only grew by 4.8%. Industrial output rose 6.5% year on year in September, up from 5.2% in August. Industrial output for the first 9 months grew 6.2%. Fixed asset investment fell 0.5% year on year in the first 9 months. Investment in infrastructure went up 1.1% year on year, while manufacturing investment increased 4%. If you compare it to previous quarterly results, okay, fixed asset investment has been declining, okay, and that goes to show that as we move towards end of the year, most of the spending or the whatever that's been allocated in the budget would have been consumed, and that is why you see that fixed investment is trending down. So survey urban unemployment rate on average stood at 5.2% in September, down from 5.3% in August. So China's unemployment rate is still hovering around the 5 to 5.3%. Now, China's per capita disposable income posted steady growth in the first 3 quarters of 2025. Per capita disposable income stood at 32,000 renminbi, up 5.1% year on year in nominal terms, while representing an increase of 5.2% after deducting price factors, because inflation in China is negative. So that's why instead of reducing the per capita disposable income, it actually increased it slightly. Median per capita disposable income nationwide was 27,000, an increase of 4.5% year on year. Incomes on rural residents increased 5.7% year on year in nominal terms, while that of the urban residents rose 4.4% over the same period. So this is a very interesting trend because it goes to show that eventually there'll be more rural residents going into the middle income group, and because they are growing at a their disposable income is growing at a much faster pace than those in the urban area, and that could actually push bulk of the people from the rural area into the middle income group, and that could trigger another rise in consumption behavior in China over the next few years. So China total good imports and export in renminbi denominated terms rose to 33.6 trillion or 4.7 trillion in the first 9 months of 2025, up 4% year on year. The growth rate accelerated from an increase 3.5% registered in the first 8 months of the year. So you can see that the first 9 months is actually much higher than the first 8 months. Okay, goods export led the overall expansion during the January to September period, surging 7.1% year on year to 19.95 trillion, while imports stood at 13.66 trillion, a slight decrease of 0.2%, resulting in a trade surplus in goods amounting to 6.29 trillion. Now that is with another 3 months to go, and the average is a few hundred, and the average is about a trillion every month in terms of renminbi. So over the next 3 months, probably the total trade surplus would reach close to 9 trillion to 10 trillion. Now, if we convert back into US dollar, definitely for the whole of 2025, the trade surplus will be in goods will be exceeding more than a trillion. Now, in September alone, China goods imports and export increased 8% year on year to 4.04 trillion, marking the highest money increase so far this year. So there's a lot of talk when it comes to the trade deal, especially those that are from the US administration. They say that, China needs US more than the US need China. And without the US, China economy will actually collapse. So right now, the export of Chinese goods to the US only accounts for 3% of the total GDP. So it's actually a very negligible amount. Okay. And China has actually decoupled in terms of trade from the US to a wide degree because China's the bulk of the increase is actually trade with Africa, trade with Latin America, and trade with ASEAN. Okay, ASEAN is the biggest one, in fact. So because of this diversification, China, despite the tariff, which caused the export of Chinese goods to the US to fall by around 20%, China still actually achieved an increase in export, and on top of that, an increase in trade surplus. So China real estate, prices of new homes in 4 top-tier cities, Beijing, Shanghai, Guangzhou, Shenzhen, decreased by 0.7% in September, smaller decline than the 0.9% drop recorded in August. So, of course, Shanghai is the shining star. It recorded a 5.6% increase. Other cities logged slower declines. Likewise, new home prices in second-tier cities went down 2.1% year on year, and third-tier cities saw a 3.4% decrease, both narrowing by 3 percentage points from previous month. The margin of year-on-year price declines of existing homes moderated across all major cities. On a month-on-month basis, the overall downward trend continued in both new and second-hand home prices in major cities. Now, I think real estate is already foregone conclusion that it won't recover until many quarters to come. And I believe that the Chinese the Chinese population has that once bitten, twice shy kind of mentality because they have plowed so much money into real estate that even though there are right now some incentives, they are unlikely to commit much to commit their money into new investment into real estate. And right now, China's total savings rate is actually nearly 22 trillion US dollar. So that means that easily around 150 to 160 trillion renminbi that are actually in the forms of savings. And they prefer to put it into savings because they do not want to, they no longer sees the the incentive to invest in properties. Even though right now, Beijing and Shanghai, they are freeing up some of the conditions to own a second home. But I think that uh, there are a lot of the people who previously invested in real estate, they have all been suffering and unlikely to continue, and that's why you see the surge going into gold and silver. So electricity consumption, power use rose 4.5% year on year in September to 888.6 billion kilowatt hour. You can see that the power use is very closely related to the GDP. GDP has been hovering around, GDP is around 4.8%. So the power use has been hovering around 4% for the most of the third quarter. Power consumed by primary and secondary industries rose 7.3% and 5.7% year on year, respectively, while tertiary sector saw 6.3% increase. Consumption of residents dropped 2.6% year on year. Now, it is very interesting to note that even though it's during the summer period, in July to August, the residents' electricity consumption actually dropped. So instead of, a lot of them blasting their aircon throughout the day, uh, you don't actually see a very huge increase, but most probably because most of the people were actually sleeping in the park, okay, where there's more breezy, okay, or they patronize the shopping mall where the air conditioning is free. So from January to September, China total power use climbed 4.6% to nearly 7.7 trillion kilowatt hour. So what could happen in November? We could see a rebound in economic indicators in Q4, with October and November seeing a steady increase as the Double 11 promotion kicks off, further reinforced by the Golden Week holidays at the start of October. Although both sides reach a consensus in Malaysia with regard to the trade negotiation, nothing is set in stone. There's a lot of speculation, okay, like one of the thing that I always find coming out from the US media is that they always see it as, a trade deal just waiting to be signed. But if you read the Chinese narrative of how the whole thing, how the whole discussion went, there is no, it's just a consensus and that they will continue talking to each other. But from the US media, they treat like a, the deal is on, it's just waiting for signature. So that's why I think there's going to be some period of disappointment if several things did not happen. Okay, so we will probably return to the status quo with regard to tariffs, with the possibility of removal of the fentanyl tariffs in return for soybean purchases. The delay of rare earth export restriction will only apply to non-military use, because China is not going to support the US military, which is now trying to arm the first island chain countries with Typhoon missiles, with Typhoon launchers that could launch Tomahawk missiles, nuclear capable, into China. So I don't think they will actually remove that restriction for military use. But for non-military, yes, they will actually delay. But there is some contradiction because some news channels say that this delay is a request, but it has not been approved, okay, by the Chinese party. So we don't know because there's some conflicting news there. Now, this could be in return for the US language change with regard to Taiwan. So I believe that in the consensus, there's a lot of things mentioned. Talk about soybean, talk about the tariff, talk about rare earth, and there was a brief mention about Taiwan. Okay, but no news outlet actually revealed what was discussed on Taiwan. So if none of that occurs, then we will just see another 90 days suspension of additional tariffs. So this will be going on and on and on, perhaps until the end of Trump's presidency. Okay, because I think there is too many different point of view and too many optimism. Okay, and there's, like Evelyn said, there's too many enthusiasm. Okay, where each party tries to have their own narrative of what has happened, okay, what could happen, and what probably will never happen. Okay, so because of all this, uh, there could be a period of volatility when positive news becomes negative. So you have to manage your uh, investment thoroughly. Okay, be sensitive to the news during this period. So more countries are expected to adopt the renminbi as a trade settlement currency since China is the largest trading partner for most of the countries in the world. So shortage in silver, key industrial metal in China, could drive the price of silver higher, and the Financial Times came out with a publication suggesting that China has officially rewired its financial system to trade globally without the US dollar, and this is part of the report. So here it says that the China's CHIPS payment, cross-border international payment system, network now connects 85 countries, quietly bypassing SWIFT and giving nations a path to trade without the US dollar. Over 52 trillion yuan or $7 trillion has already moved through chips, and 95% of Russia-China trade now clears in local currencies. So here it stated that this isn't just another BRICS headline, it's the structural de-dollarization moment we have been anticipating. Western sanctions weaponize SWIFT, and the rest of the world built a workaround. The global south is no longer asking permission. It's designing a multipolar financial system that runs on yuan, gold, and energy, not Washington's approval. The US is still busy congratulating itself for the use of for using the dollar as a weapon, while the rest of the world is quietly cutting the supply lines. Now, this is really a wake-up call coming out from the Financial Times. So we revisit this chart again, okay, and China's role in trade and finance. The explosion of gold warrants totaling 86.8 thousand tons is indicative of China's ambition to secure its position in international trade and finance. The gold warrants will be collateral to be used as liquidity provider in international trade and finance. It's just function similarly like the US Treasury, okay, which is a collateral that is used, okay, to provide liquidity. So right now, China is going to use gold warrants as a substitute, okay, and that's why you see that there is an uptick in gold warrants. Now, these gold warrants can claim for physical gold, can be converted to physical gold, and that is why you see 86.6 thousand tons or 86.6 thousand tons of gold, okay, that is stored in the SGE specifically to support the gold warrants. Now, this is supported by news that the SGEI or Shanghai Gold Exchange International will establish several international vaults. It also cements the adoption of the renminbi in international trade and finance, as it can easily or readily redeem for gold. So this is going to alter the structure of global trade and finance. If, let's say, the moves turns into fruition, okay, because China wouldn't amass so many gold warrants if, let's say, it's not for specific purpose, okay, and that means that a lot of the speculation that is going to be used as a repo tool will uh, will be true, okay, because that is one way which can cement the renminbi, cement the internationalization of the renminbi in international trade and finance. Now, in terms of geopolitics, The Pentagon has sent another carrier fleet to the Caribbean. We are seeing major escalation. And here it is from the Brazil MST leader. To the gringos, don't you dare enter Venezuela. We will close ranks with Venezuela and the Brazilian people and all the peoples of Latin America. We will fight until the last Navy soldier returns home in a grave. Now, this is his warning. And the president of Colombia, we are not a colony anymore. Colombia will not kneel to Washington's mafia-like threats. So you can see that there is very vocal resistance, okay, against the US interference in the Latin America. So the peace in Gaza, I believe, will be temporary, okay, because Israel will not stop its Greater Israel plan, okay, and US cannot rein in Israel because of the huge APEC um, influence in US politics. So Russia has now adopted an aggressive posture in the war with Ukraine, destroying key infrastructure after Ukraine drones destroyed several Russian refineries. So this has plunged Ukraine into darkness because the drones are manufactured. You require electricity, so Russia is targeting the infrastructure. Previously, they didn't, okay, but I believe that right now Russia is already losing patience, and the only way is to force Ukraine surrender. So there will be border confrontation between Pakistan and Afghanistan. This happened soon after Afghanistan rejected Trump's demand for the return of the Bagram base. So, Evelyn, back to you. Evelyn? So, okay.
Yeah, can you hear me, BC?
Yeah.
Yeah, okay. Okay, so let me reshare my screen again. Uh, okay, maybe you will need to stop share. Just share my. Okay, yeah,
Okay. I stop sharing.
yeah, okay. Let's see my screen.
Yeah.
Just go to. Okay, so can you see my screen? Um,
Yeah.
yeah, okay, good. So we will be opening our astrology and global trends membership very soon. Okay, so for 2026, uh, um, yeah, so this is the price that we have for the for you all if you join us for the first time. Okay, so what you will be getting is a member early access of our forecast recording, the presentation slides, the exclusive Telegram group, and then the 2026 we have the annual astrology and global trend forecast also, and the book on 2026 forecast and monthly investor manifestation and special discounts for our um, courses. And then in you have two tiers of membership. One is comprehensive, another is premium. The premium one will have all the comprehensive memberships.
Yeah,
Um,
Evelyn, your voice is a bit soft again.
yeah, okay.
Okay.
The premium one will have the all the comprehensive memberships items to get, and also it will comes with a weekly report. Okay, the weekly report has the market insights from PC, and also I will put in the three victory Timan direction, three victory palace. If you know what is Timan and three victory palace, if you do not know, it's okay. I will teach you on, what is, the how to use this effectively, okay, and daily achievement direction as well. So this is what currently our selling price is. This is um going to be, and so far I think let's go through the track record we
Evelyn,
have in the, yeah,
I think there's
yeah.
also a free gift for the Met investment strategy.
Yes, yeah. I will
Yeah.
we will have a another free gift is the Mac investment strategy that we will put in as well. Okay. So these are the this one. Later on, if you have the interest, then I will send the form link to you all. Okay. So this is some of our track record where actually we talk about precious metals since 2-3 years ago. If you follow us, even in this platform, without even joining our membership, I think if you take action, you will have, earned a lot. Okay. Yeah. These are the things that we have um gone gold, and then silver comes after this, okay, especially this year. So we have already forecast this, and this is our track record. Do not buy all these stocks already. They are, you know a backdated news already. We have newer one already. So this is our track record on the stocks that we have spotted as well, and some the bitcoins as well. This platform, we don't only talk about shares, we talk about commodities as well. So, yeah, PC, you want to,
Yeah.
you,
So what how do the members benefit from the Telegram channel? So every now and then I would identify certain companies that are showing some good results and which I will notify members. So here last year we notified them on SMIC stating that because it will play an increasing role in China's semiconductor manufacturing. So, it's time to look this up. And then also on Xiaomi, uh, that it looks very promising, especially with the launch of its electric vehicles. And since then, SMIC is up. So it's just less than 1 year, okay? SMIC is up 211%, Xiaomi is up 59%. Of course, Xiaomi at one time was much higher than that. It reached close to about 60 Hong Kong dollars. But since then, because of an accident involving the death of one of the passengers, so the share price have dropped slightly. So because of um the negative sentiment, but it's just similar like the early stage of Tesla, when Tesla was very new testing its vehicles, there were also a number of accidents where the passengers were burnt alive. So Tesla shares have been similarly affected. But I believe that as long as the company keep on improving its safety features, improving the quality of its products, then it will continue to recover. Next slide.
yeah,
So
okay.
we also uh, last year we talked about Alibaba, okay, um, stating that you know that Xiaohongshu is actually very huge in China, and when they migrated to Alibaba Cloud, that would be a very huge revenue contributor. And we also share, what analysts talk about certain stocks. So here HSBC rated Alibaba better than Baidu, and since we inform our members, okay, the Alibaba HK is up 96%, Alibaba US is up 93%. Okay, so this is part of the benefit of joining our membership, where in the Telegram group, I often share certain observation of certain stocks or certain analyst rating on certain stocks so that
And
the
certain
members can be
commodities as
aware.
well.
Yeah,
Yeah.
and commodities too.
Yeah, yeah.
Yeah.
I also share some of the timings that be given to the member, which is can be used as a reference with high accuracy as well. Okay, yeah. We wouldn't. Okay. And we wouldn't say we are 100% accurate. If you're looking for 100% accurate, you can look elsewhere. Okay, I can tell you that. It's just that what we share, we are using two methods. So the chances of the accuracy is one of the highest in the market. Even feng shui masters that are doing this, they don't have the benefits of global trends. And the global trends people that is doing the analysis, they don't have the benefits of the astrology. So we are combining these two methods to become more powerful as ever. Okay? Yeah. 4 years, I think almost like 3+ years of track record now. So I think that is time has already proven that we still survive until today. Okay. Yeah.
Yeah, I just want to elaborate. Just now, Evelyn mentioned that if you join as member this time, we throw in a free introduction to MET investment strategy. So this is a program uh, that I designed. Okay, MET actually stands for measurement, analysis, and deliberation. Okay, so that it is a introduction to a way how you measure what analysts recommended. Okay, for example, we hear a lot of analysts recommending different types of stocks or different types of companies. So using this methodology, you can actually evaluate how whether what the analysts say, has a close um, relevance to your risk acceptance or to the market underlying strength. It is actually a methodology introductory course, okay, which you also get a free video of if you sign up as a member.
You can use it as your reference to your investment strategy. Because a lot of people ask for investment strategy. So yeah. So this is one of the things. I think I also follow PC for many years. So far I think we are in the right track also personally. Okay. Yeah. So let's go through a summary and then we will go through a Q&A. Yeah. So the in terms of weather is unstable. With sudden rain, as I say, because we are already in the winter month. The water is energy is quite high, and then the geopolitics, the tension will raise, especially in the maritime and the tech domains, and there will be potentially floods and systemic volcanic events, and there will be energy tech growth with caution on real estate and infrastructure, and the financial market will be quite volatile from the energy standpoint. Over to you, PC, to do your summary.
Yeah, just as Evelyn was saying, tensions in maritime, right now, what is happening, all the action is actually in the Caribbean Sea. Okay. So overall, there'll be more controlled government narrative because a lot of governments are at the verge of facing collapse in their funding, a lot of political turmoil. So you can see that there's a lot of enthusiasm or eagerness of government to control the narrative. Okay, and this could actually backfire eventually, which will cause even more disruption. And therefore, it could lead to certain volatility in the market as well as in the political systems. So tension starts to escalate in Latin America. Realignment in global trade and finance is in progress, driven by BRICS. Uh, Today, I just sent out on the Telegram channel. Yeah, besides talking about stocks and companies, we also share about geopolitics, what's happening around the world. So just in the Telegram channel, which I shared, is that Brazil and Indonesia have decided to trade among themselves using local currencies. So you can see that there is a realignment of a new system, okay, in global trade and finance, with a new system spearheaded by BRICS. So political turbulence in Europe and North America primarily, and gold and silver see price manipulation amid shortages in global physical supply. So I think there will be a slight correction because on one hand, the paper derivatives, those bullion banks, which I believe could be facing net loss amounting to close to 100 billion, will want to get out of their net short position. But that is being hampered because of the demand for physical, which continue to drive up the spot price. So therefore, we are seeing a huge battle being fought. Okay, and this will create volatility in the gold and silver market. So that's all I have.
Okay, thanks, PC. So once again, I strongly encourage you to join us as a member. For comprehensive member, it will be 249, and also for the premium, it will 349. Okay, it's actually if you join December, in December for January forecast, is 1 year is 249. So this is also an early bird price. So it's really very worth it. So once we have our book ready, we will post the link available for registration. For the members, we will talk separately in the Telegram group, okay, on the instruction to renew for our existing members. Okay. So yeah, with that, um, I would like to ask if anyone has any question to ask, you can type in the chat box. Oh, okay. Audrey has a question. He says that I mentioned in November the metals could see a cautious growth. Apart from gold and silver, does this observation applies to all market like copper? Yeah, this one generally is for the general metal. That means it's all metal related items. Okay, because this is metal energy. Then another one is in addition, do you and PC anticipated volatility in other metals that is not gold and that is volatility in the markets. So yeah, PC can you want to answer this question?
Yeah, I think um like today, the price of gold and silver, like I say, is being fought, yeah, between paper market and physical market. But I think the physical market will definitely have the advantage because Shanghai is also bleeding a lot of physical, and that physical need to be replenished. Because one analyst actually say he, as far as he is concerned, Chinese industries will need to buy silver no matter the price, because otherwise their whole business will shut down. Okay, because silver is used in solar, is used in wind energy, is used in EVs, and is used in medical industry. So no matter how expensive it, they will still buy it, and that is why uh, uh, the Chinese administration of the Shanghai Gold Exchange are stating that, for those speculators, they are actually trying to pressure them to settle in cash so that the physical will go to the industries. And recently I read a news that India itself is approaching silver miners directly to buy silver, no longer through the also through the LBMA, but also through the miners. So China is already buying directly from the miners. So if they pull out the supply from the miners, that means there'll be lesser stock uh, for the exchanges like the LBMA. So that is why I think after this period of correction, there'll be another uptrend, especially this week, few important things will emerge. One is that whether Trump will meet with Xi, and the other thing is that the Fed cutting interest rate. So I think right now, like today, gold and silver is down quite a lot because they want to force a lot of people into liquidation, especially the uh long positions, okay, into liquidation, so that when the Fed start to cut interest rate, the gold price goes up, then that's when they would have already covered significantly their net short position. Now, other metals like today copper is up. Now, copper is being driven by three important things. One is the collapse of the mine in Indonesia. The other is Codelco, the world's largest mine, is facing lower grades. Okay, and its production is shrinking. Then the other is due to disruption in another major mine, disruption of works. So copper is up today, despite gold and silver coming down. But I think copper will still hold its position because it's driven by supply crunch. Okay. Platinum is a very small market, but right now there's a lot of demand for platinum, so the price have gone up. And I think that the bullion banks which actually con control the metals market, they actually are having a tough time, okay, because they want to reduce gold and reduce the speculation on gold and silver. But if they try to short sell platinum altogether, they actually put themselves at a much risky position. So they cannot tackle so many metals at the same time. So, but I believe that, like Evelyn say, the energy is a bit uncertain to low, and it can affect certain metals, and it can also affect other metals as well. Okay, so the wide spectrum of other metals, if let's say the Fed decides that it does not want to cut interest rate yet. So right now the market is betting that the Fed will cut, okay? Because we are in October, that's November and December. So the Fed mentioned that they will cut 50 basis point in the remaining of this year. So we do not know in which month. If the Fed certainly say will decided not to cut, then of course, you know, that 50 basis point cut has now been reduced to 25 basis point. And that could actually cause the US dollar to strengthen and the metals market to fall. So this is something that is still not set in stone because you never might know what the Fed would want to do. Okay, so just treat it a bit more cautious. I think this is not the time to uh, be actively involved in the stock market, but you know, start to identify those stocks that you feel okay that would actually give you the advantage to achieve gains. Especially if let's say right now there's a correction, especially involving gold and silver mining companies or the ETF. So you need to monitor that. If let's say there's a further downside, maybe you can put in some consideration. Yeah.
Okay. Yeah. Yeah. Okay. You're welcome, Audrey. Any other questions besides